Okay, let's go.
All right, today we're diving into a strategy that is, well, as powerful as it is dangerous: scalping gold. We're going to break down a really specific, high-speed method for trading one of the most volatile things you can trade. Now, this is definitely not for beginners, but if you want to understand the mechanics of a high-performance system, you are in exactly the right place. So let's just jump right in. And yeah, that quote from our source material really says it all, doesn't it? Gold's insane volatility is what creates the opportunity for these huge, fast profits, but it is a serious double-edged sword. This is a high-risk, high-reward game, and you've got to know that from the absolute get-go. So, here's our game plan. We'll start with a critical warning, then get into our toolkit, cover the 3 golden rules, then the precise entry and exit signals, and we're going to wrap it all up with the mindset you absolutely need to trade this thing. Okay, so why does gold demand so much respect? It really comes down to its unique personality in the market. You have to understand what you are up against before you even think about placing a trade. The price can just explode in either direction in a matter of seconds. It can instantly wipe out a trade if you're not careful. This is why our source is crystal clear on this. If you're new to this, do not, I repeat, do not trade gold with real money. You have to start on a demo account. You need to get a feel for this volatility without, burning through your cash. Now that you understand the risks, let's talk about setting you up for success. Because this isn't a strategy you can just wing. It requires a super solid foundation and a very, very specific set of tools on your chart. And this slide right here really drives home the point that this is an advanced technique. You're not just learning one strategy. You're actually combining multiple concepts into one powerful system. Before you even attempt this, you need to be totally comfortable spotting all of these things on a chart. They're your building blocks. Okay, now for the nitty-gritty. We're on the 5-minute chart. It's fast enough for scalping, but it's not nearly as noisy as, say, the 1-minute. Your go-to indicators are the 21, 50, and 200 smooth moving averages, plus a standard RSI. And hey, don't forget the pen and paper. Seriously, writing down your rules is so key to trading like a machine and not an emotional wreck. All right, now we're at arguably the most important part. These are not just guidelines, they are the absolute non-negotiable laws of this strategy. If you bend them, the market will break you. It's that simple. So here's the bottom line. You only go with the flow. The 200 smooth moving average is your North Star. If the price is above it, you are only, and I mean only, looking for long trades. If it's below it, you're only looking for shorts. No exceptions. This rule alone is designed to keep you on the right side of gold's powerful momentum. I just love this analogy from the source. It perfectly captures how useless it is to fight the market's momentum. I mean, just picture it. You can't stop a semi-truck with your bare hands, and you can't fight the trend in gold. That is how you blow up an account. You have to trade with the power, not against it. The second rule is all about the condition of the trend. You want to see clear separation between your moving averages. See how they're fanned out and sloping? That tells you it's a strong, healthy trend. Now, if they're all tangled up and smashed together like you see on the right, you don't touch it. That's a choppy, unpredictable market. And for this strategy, it's a total no-go zone. Okay, we've got our rules, and we know what market conditions to look for. So how do we actually get into a trade? Well, the signal is a very specific candlestick pattern called a 3-line strike. Here's how it works. Let's say we're in a downtrend. Price is clearly below the 200 SMA. You wait for a small pullback, and you're looking for 3 bullish candles against that trend. Then you watch for one big, powerful bearish candle that completely engulfs that little pullback. That's your entry signal. You jump in, and you immediately set your stop loss. And when I say tight, I mean a razor-thin stop loss. In the example from our source, the entry was at 1778, and the stop was at 1780. That's just a tiny $2 risk. This is so critical because gold can turn on a dime, and a loose stop loss is just a recipe for disaster.
So we know how to get in with precision, but knowing when to get out and actually take your profits, that's just as important, right? For that, we turn to our oscillator, the RSI.
Our main exit signal is something called RSI divergence. Now, what's really cool about this is how it acts like an early warning system. Think of it like this. It's like a car that's running out of gas. The car is still rolling forward, but the engine is sputtering. That's what RSI divergence is telling you. The price might be making a new low, but the momentum, the power behind that move, is fading. It's a huge sign that the trend is getting tired and a reversal could be coming. And that is your signal to get out and lock in your profits. So in the second example from the source, this strategy netted a $7 move on gold. Now think about that. When you compare that $7 potential reward to the $2 risk we just talked about, you can see why this strategy is so powerful. That's a fantastic 3.5 to 1 risk-to-reward ratio.
We've covered the rules, the entry, and the exit. But you know what? None of it matters without the final and frankly most crucial piece of the puzzle, your mindset.
So let's just boil this all down. You trade with the 200 SMA, you stay out of flat, choppy markets, you wait patiently for that perfect three-line strike for a sniper entry. You keep your risk to an absolute minimum with a tight stop loss. You get out the second RSI divergence tells you the momentum is fading, and you don't force trades. You wait for every single one of these conditions to line up perfectly.
And this is the question you really have to ask yourself. The strategy works on paper, but its success depends 100% on your ability to execute it flawlessly over and over like a machine. So do you have the patience to wait for that perfect setup? And do you have the discipline to follow the rules without hesitation, without fear, without greed? The real challenge, you see, isn't in reading the chart, it's in mastering yourself.